Another rabbit hole. Um, when I was in college, one of my favorite classes was quantitative methods. Doesn't mean I was good at it, but I just had fun just crunching numbers and finding out cool information, extrapolating stuff from those numbers. So right now, has nothing to do with stage analysis, nothing to do with classic charting framework. I put the chart here of gold. I did it a few times, I think, for silver on the StockTwits and Twitter. But I've noticed on the gold chart or any charts, monthly candles already, they're pretty much, they remove a lot of noise. So when you get a trend, when you have consecutive green candles going up, that's a lot of time. There was a lot of red candles and green candles within that on the weekly, even more on the daily, lots of fluctuation. So when you have green consecutive candles, that's a couple of months, you're already in the trade. Price action has moved. Could have moved relatively more than on smaller time frames. And combining that with how many times now that you have monthly candles that are glued green, that you have green, that you're always closing higher than the previous month in an uptrend, how many of those can you put together? How often do they happen? And how that could help you knowing, look, let's say I went up 5 green candles in a row, and we've never had 6, and then you're in the trade, and then you could expect a red close the next month. Doesn't mean you have to sell right there. Sometimes the red close could just be like a slightly red close right here, and then after that it moves back up. Doesn't mean you're gonna have a hard pullback. It just I don't know. It's almost like just fun, just to figure out if you could almost could put probabilities on the next month. It will be closed if it'll close higher or lower than the previous month. So right now I popped up the gold chart and look at that. Let's see, a lot of data all the way till 1976, and this is pretty cool. The consecutive candle count. And if you have gap ups, it doesn't work too well, or gaps downs. But on spot gold, usually there's less gaps than on the futures. First thing, I'm going to remove the consecutive bars down. I don't want to play with that. I just want the green ones. So check it out. Oh, reset chart. What did I do? Okay, I hit it. Patrick. Why'd I hide it? Okay, and these, you see these bars, these alerts, red alerts. Right here, there's a threshold. So it highlights you if there's more than X number of quantity of bars that have been attained. I don't want to see that either. I just want to see the green. You see these green numbers here. So that's one consecutive green bar. Then there was probably a red, one green, then a few red here. And then, 1, 2. So 1 green bar, 2 green bars. And then you go up here on the scale. Let's look at, okay, I'm going to zoom out. And let's take out all of the small ones, style. Okay, that's 1 consecutive, 2 consecutive, 3, 4. Let's see until there's, okay. One time we had 6. Just one time we had 6 consecutive green bars. And I'm not even sure. See right here, that's another example. It wasn't actually 6 because 1, 2, 3, 4, 5, 6. Oh yeah, it was 1. Where does it start? Right here. 1, 2, 3, 4, 5, 6 consecutive months. It went up. But let's start back where we are today, and what are the chances of us having more consecutive candles. Right here we had 1, 2, 3, 4. For silver we had 3, where we closed 3 consecutive, and gold just started just a little earlier, and we had 4 consecutive. So what are our chances of getting a 5th consecutive green candle right here? So that means for September right now, that's going to revert, and we're going to actually close higher than the previous close right here. So let's say we're 4. How many times from 4 did we convert to 5? Okay, first I'm going to take that. Oh, Patrick. Okay, first we're going to calculate how many fours we have. That's going to be, oh, since 76. All right, let's back it up. Back. Okay, 96. How many times we had 4 consecutive? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19. So we have 19 times that we were at consecutive 4. I'm not going to calculate. There's just getting to 4 is going to be pretty insane because you have to calculate the percentage of chances of going from 1 to 2 and then from 2 to 3 and 3 to 4. So right there when I did it for silver, when you get to 4, it's like I think 8% chance if starting from 1, and to get to 5 I think it's 5% chance. But right now, I forgot my count. I have to count again. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, okay, 19 times. And how many times did we convert those 4s to 5s? One, 2, 3, 4, 5, 6. So 6 times. I need to pop up my calculator. Where is my calculator? Okay, let me do that. So 6 divided by 19, 31%, 31.5%. Let's do it here. Pop up here. 31% of the time, 6 out of 19, 36%, we converted from 4 green closes to 5 green closes. So these are the chances right now of us converting, closing the month. There's a few weeks left, a couple of weeks left now right here in September. So that's how much our percentage chances of closing green right now. Like it could close red at just a tab under the close of the previous month. It could close down a little lower. But those are the percentage, the chances of getting that 5th candle. And you could even have more fun with that. And let's say we get that green candle. So 5, we had it 6 times. We had 5 green candles. How many times do we get a 6? So right here, since 1976, we only had 2 times that we had 6 consecutive. Let me just check here. Where did it start? 1, 2, 3, 4, 5, 6. So now 2 times out of the 6. Pop up my calculator. So 2 divided by 6. That's another 33% chance. So after that, if we close red, if we close green in September, our chances of having another green candle and getting that 6, that's another 33% to get all the way there. So from here, to get both of those, I believe we have to multiply 0.33 times 0.31, and then we go down to 10%. So from here today, after our consecutive 4 green candles, to get 2 more, that's 10% chance. We're really getting low that we're going to be able to get green candles, overhead resistance here, a whole bunch of things that could bring us back down to get those red candles. But to get the next one, 31%, and that's kind of low. So I wouldn't be a betting man there. So now this could kind of help you to manage your expectations. You know already that you could be using, close that now, just like I did, using the angle of ascent on the 12-month moving average, which is pretty stable, noise reduced. When it starts going up, it goes up. Knowing that you're going to hit monthly defined resistance previous support and resistance, that you're already being stretched out above an inclining 12-month moving average right here. Let me pop that up. Knowing that you had 4 consecutive closes, and statistically it's going to take you have 33% chance of having a green close, and having 2 green close consecutive, you go down to 10%. That you're stretched away from, it's already been stretched a lot more before, but there was no overhead resistance when that happened. So total weight of evidence, you're getting stretched, you're approaching monthly defined resistance. A lot of factors now are coming in that odds are we're not going to get that 33% and that 31%, and we're most likely going to be in that 69% that we're going to have a red candle here. Again, doesn't mean we're going to go a lot down, but you could manage your expectations that we're going to be morphing the chart. You're going to be sideways or pulling back slightly, letting the 12-month moving average catch up and make it healthier for you to get an entry right here. So no fear of missing out. This right here is buying at the top, where it's a risk area. You want to buy when the price action either sideways move and the moving average goes up, or slightly goes down, and after that bounce back up. Right here you get a good risk to reward entry right there. Complement that, like I said, with the angle of ascent. And if you know pretty much, let's say 10%, you're usually 10% above the 12-month moving average. You add that to the 12-month moving average. So let's say you're thinking about getting to 1900. When will I get to 1900? 10% away. 1900, 1837. Right there. So right here, what I'm doing is, if I know that I'm going to be above the about 10% away from the 12-month moving average, and I know my angle of ascent of the 12-month average is here, I add it on top. So here I'm close to 1900, 10% away, 1911. So let's say one reduced target about right here. Just that, just a little bit. Around these areas, this is the time it's going to take. So measure from where you are now, and about 14 bars. So that's about a year, 14 months, a year and 2 months. So for your expectations, if the angle of ascent stays like that, that's the time it's going to take for you logically to get around that area. So don't think that you're going to get there in 2 months, in 6 months. You could always adjust. If the angle of ascent starts going sloping less of an angle, then it's going to take more time in the future for you to reach that target. Emotion management, I'm trying to find tools to manage my expectations. I love that consecutive candle counts. I find that pretty sweet. I love the angle of ascent. And the more you look at it, the more your brain, that greed factor, you start pushing it away. Your brain has a tendency to condense time, and I'm going to be a millionaire, I'm going to triple my money, whatever. This is down the road, and when there's pullbacks, you'll know there'll be a lot of time for it to go back up to reach your target, and then you want to buy on this weakness, but above important support, above a 12-month moving average. And like that, you'll be able to add position at the good moment, and not fear of missing out and buying right here when you're hitting probably congestion area. So that's it, guys. Thanks for watching, and see you guys later. Ciao.